Alrighty, again, this is Blue with Profiteer Trading. We're going to be doing this playbook trade, getting right into it. Trading futures and options on futures so it involves substantial risk. It's not suitable for all investors. Past performance is not indicative of future results. Looking at this trade, I decided to call it the rotating bull, and I'll explain that in just a second. However, let's just make sure that this is, we recommend you lower to a stream bit, right? All right, let's just move on. So we're going to go over why playbooks are important and why we should be implementing them. So they're, again, demonstrating these A-grade setups that have these repeatable factors. You study this playbook, this composition of your setups, and it will expose you to the trades that really give you that edge, and it gives you a deeper understanding of how you trade. So now you know what does an A+ setup, what are these trades that I find success with continuously. You are able to then identify errors in your execution. If you find a trade that had that A+ setup and you missed it, you didn't take that trade, that's an excellent trade to playbook, because then you can go back and more thoroughly understand what went into that trade, so the next time you see it, you can identify that. And it gives you that deeper understanding of your own methodology. If you're constantly playbooking these trades, really digging into what makes a trade, you have this better ability to interpret your own methodology. So this was a crude oil trade. Heading into the big picture, what was crude oil looking like? The big factor, the only really important factor here, is that we are in kind of this rotational environment here, and VWAP has been acting as a quasi resistance, and here we are, we're just holding above it in this rotational pattern. So the current market condition is rotational, and we are going to treat it as a rotational environment until proven otherwise. So until proven otherwise, I'm treating it as a rotational environment, and that's the most important factor from the big picture right there. Looking into some other macro conditions, we have our weekly VWAP in blue, monthly in red, and the big picture I need you to see here is that we are, rotational, just like I showed you on the daily chart, and we have been respecting the extremes of this weekly VWAP. So every time we push into the extremes, we are coming back, push into extreme, coming back, pushing into an extreme, coming back. Monthly VWAP has been a pretty consistent area to look for some sort of response from. And it was important to notice that we were now pushing into the extreme of this weekly VWAP. So that was really the only condition there I wanted to look at. Looking at our morning prep, what had we identified is we had kind of this neutral CVA inflection point, some of the different prior value areas. This was our big key here. So we had this bull line right here, this bull inflection area, and we had this line in the sand. So anything above here, we're going to really be pressing the longs. However, we're expecting, because we're in a rotational environment, we're expecting to be fading this extreme and getting long down here, short up here type of thing. So that was really the key driving thesis, which ended up being that if we can find buyers into this bull zone, then, so again, this is an if-then statement, I want to be long on pullbacks until we reach the targets above. If we find buyers in this bull zone, I want to buy pullbacks until we can start to hit some of these targets above and see how the response is. The antithesis in that case is if we fail to hold this bull zone, I want to be getting short on pullbacks until we can breach the targets below. So if we fail to hold this bull zone, I'm now going to flip sides. So I go from a buyer, and now we're breaking down out of this rotational environment, and we're looking to be a seller. What was our acceptance looking like? Well, in the overnight session, you can see we did see that response from buyers into this area. And since we were already in a rotational environment, we're still accepted within this area. So I didn't need to see another retest before I could get involved. I was already interested in buying pullbacks from this location. So you can see, boom, pullback right here, pullback right here. As you'll see in a few minutes, I ended up taking both of these trades, got stopped out of this one, but then I got into this one. What was our market profile showing us? So this was the day before, this composite that we had formed. And then we had this bullish inflection point, which was a few different confluent references. Obviously, we have the tip of the TPO here, value area low. It's also the point of control from a separate composite we had down here, as well as some of the longer term VWAP points. That's not really important. What is important is that we identified this bull area. As you can see from the open, we essentially drive down into the bull zone, and they take it. Right from there, they take it right off the tape. And when you're looking at market profile, you are able to get very good likely destinations. So this was that previous value area. You open up outside of that previous value area. Typically, what you want to see happen is you want to see the market come back up and at least test this area. So because we opened up outside of the value, I was already expecting the market to at least want to test this lower end of the value distribution. So that really guided me in where I wanted to be taking profits, scaling out at this value area low, and then I was looking at, okay, here's our point of control. Are we going to be able to break that? And obviously we did, and we ended up getting right up to the top of that target. Order flow. So this actually wasn't, I don't know, this, go away, Google. Okay, this wasn't actually that big of a deal as far as what contributed to the trade. If you see where the arrow is pointing, that's kind of where I entered the trade. Order flow wasn't really giving me a strong signal until that ellipse where you see that bigger spike in buying. So the biggest cue for me on order flow was that since, around 6 a.m., 5 a.m., we had seen the bulls pick up the tape. So overnight Globex session, part of the Asia session, it was getting sold, sold, sold. And then really from like the London Open and whatnot, we started to see buyers picking it back up, which could have helped drive that sentiment as we approached delta neutralization. So areas for improvement on this trade. As you can see, here's that first trade I took on that first initial pullback. Obviously, I ended up getting stopped out right there from the pullback, and I think it's important to really understand why the mental framework that goes behind this. Because a lot of the times, you might be that guy that buys this pullback, you get stopped out, and now you're spooked. Now you're spooked. You're so worried about the fact you just got stopped out on a trade that when it comes time to really take that second pullback opportunity, you don't take it. You're so concerned with this, you miss this. And you might be someone who says, oh, that was too close to the open. I mean, those are all viable options. And this trade could have totally gone wrong, but you need to accept the randomness in markets. You need to buy this knowing, hey, this was my bull zone. I said if I get a pullback, I'm going to buy it. Here's my pullback. I'm going to buy it. Boom, get stopped out. We're still above the bull zone. Here's my pullback. I'm going to buy it. So being able to execute on that plan is very important. Now, where could I have improved was obviously my trade management. So here's where I exited. I took my scale right there, and I ended up exiting the final position up here. Now, why did I do this? Well, I was looking for right here at this value area low for that scale, and I ended up taking it just a little bit earlier because I started to see this stagnate. So I was kind of concerned that we were going to start chopping around in this DVA, and I would rather have just taken off that initial scale before having to deal with any of that with the larger target and picture. And then as soon as we got to here, that was at that point of control from that previous composite value area. And typically, you're going to see a reaction from the point of control, which is kind of what we got right here. And I was interested to see, to say the least, if we were going to come back down and try and firm up this low. When you get that reaction from the point of control, often you'll see it come back down, hit this value area low, which would have been confluent with this +1 standard deviation of VWAP, and that could have then brought us back up here, we didn't get that. We ended up just having it flatline and then take right back off. So this would have been the ideal target, that value area high, and I didn't get there. So I guess the lesson for the next time I take this trade would be, if you're thinking it's gonna come back down and set that, let it do it. Leave your core position on. If we start to break below this value area low, then maybe you take off the trade. But until we're seeing rejection from this value area, you can make the assumption we're gonna accept within it and remain rotational. And the same thing shows right here. So again, we open up, we drive in. As soon as you get the acceptance within this value area, you're now looking to tap that value area high. We get up there and we tap it. I ended up scaling out at this point of control from the day before for the previously stated reasons. Now, what went into this trade? Again, we had this bullish inflection point. So that's why I stress all the time how important your morning prep is. Your morning prep is telling you, it's your Bible. It's saying these are the trades I'm allowed to take. These are the areas I've identified from CVA point of control, higher time frame charts, confluent long-term VWAPs. These are all important factors that went into generating that bullish inflection point. And now you're buying pullbacks. Now you're looking at lower and higher time frames to get a sense for where these pullbacks are coming from, fading the negative 1.5 extreme of the weekly developing value. So the weekly DVA, like I had shown you in the previous chart, had basically remained rotational. So fading the extreme, you want to be getting long down there. And we had seen cumulative delta recover since the 6 a.m. pre-market bulls. It's somewhat of a factor. It's not a very strong factor. And then, of course, there's just entering on rhythm, entering on that pullback, so the trade just kind of instantly starts to work in your favor, and you're not sitting there in the middle of one of its legs watching it go down on you before it ends up actually going back up. Alrighty. Go ahead and put any questions you guys have in there, and I'd love to address those.